Hey, good morning, everybody. Welcome to Wednesday, April 22nd. You can see Charlie's just laying around the house, waiting would love to go to the office. That's her thing to do, but not been doing it lately. Been sticking at the house like everybody else. Hope your day is off to a great start as we hit the middle of the week. The first 2 days have been really kind of rocky. As well as oil prices have been plummeting terribly. As we look at where we are today, we've got all the technical issues, I think, worked out between Dave and I. And so looking forward to a great short program today. We're having to run out pretty quick this morning. So it's a great day. And I'm looking forward to our conversation today about where we are and where we may be going. But what's important is that you make sure you don't have too much risk in your portfolio. And that's what we're here for. Hey, a 15-minute phone consultation, not a big deal. Get us on the phone, 863-382-0037. That's 863-382-0037. Hey, Dave will join us here when we pick back up.
5 points. There's no patrol there. We're at 8:41, 19 before 9. Time to check in on your money and see what's going on Wall Street. Phillip Statler from Statler Financial Services, as usual, is on the phone. Phillip, good morning. How you doing today?
Good morning, Dave. Hey, doing well today. I hope you are too. Halfway through the week. It's not been a good week so far, Dave.
No, just downright poopy, as a matter of fact. We were looking pretty good there on Monday morning, and then all of the oil crises hit, and we've just been tanking. I'm looking at my big loser list, and no big surprise, the energy issues are on the downside again, and maybe that's because the June futures started out yesterday morning at about $15 a barrel, and they're already down to $11.77, 76 cents as of a couple of minutes ago. We just can't give oil away, can we?
No, we can't. But that's up off of yesterday's close a little bit, though.
Yeah, I noticed there's a green number in front of mine, but still $11 and change. And remember, we ended the May futures in the negative territory, and we're all hoping that doesn't happen again. But it's putting a real pall on the market. Even Netflix put out some guidance saying that we ain't going to give any guidance because this is really scaring the pants off of us.
Well, it is. And I think that's going to be kind of the company line as we look at earnings going forward and announcements being made. I think we're going to see that is the case, that nobody wants to give any kind of guidance because nobody knows what's going to be. I mean, even what the next month looks like, much less what the next quarter and this quarter is going to look like. So there's just too much uncertainty out there right now.
Understood. There is a little bit of optimism on the market this morning, only because they did manage to cram through renewal on the loan funding for the Payroll Protection Act. So that's giving us a little bit of optimism. But as far as opening up the world and making the coronavirus problem something we can see in our rearview mirror, there just ain't no time frame we know about yet.
No, there's really not, David. And I even I caught a part of an article where they were talking about this is probably not the last. There's probably at least one more stroke of help coming for the coronavirus folks out there. And so that's one thing to look at. The other thing, I was reading an article, Citibank came out and their economists think that we're not out of a bear market yet, that we still need to go down and test some lows, and that they're looking at 4 key things that they're kind of looking at to make that decision, but that we still have some time to go in this bear market.
Understood. Yeah, that's pretty much something, a song you and I have been singing for some time. The numbers say, yeah, we're out of the bear because the S&P's only down like 15-odd% since the first of the year instead of the 20% number that we always use as the measure. But you and I have been singing that song. Neither of us have ever seen us come out of a correction, recession, or otherwise without testing the low at least a couple of times.
Exactly. And so I think we've got to go back and test this low. And I think, we are going to see more and more volatility in terms of until we get past this. And then even when we get past this, I'm not sure what volatility is going to look like anymore.
Absolutely. I mean, I claim to be an optimist, and I tend toward being rather bullish on equities, but still, you got to look at it with open eyes in the process. And a lot of folks that were trading things upward, especially when the amateurs kicked in, really didn't have their eyes very well open in there for a while.
Well, that's true. They didn't, and we'll have to see what happens going down. And as we finish up earnings seasons, what's that going to look like, and how's that going to affect the markets as they continue? I mean, one of the things I think they saw that really caught me in the article I read is you can't pay attention to price to earnings ratios because in '08 and '09 they were down significantly, but in the bear market in 2000 to 2003. Those price earnings ratios stayed up in the 20s, low 20s. So you can't necessarily use that as one of your guides.
No, just one of the measures, and you can't use it as the only one, that's for sure. We mentioned it is earnings season, and a few household names have been reporting, and we'd mentioned one of them at the offset, Netflix, who's been just absolutely having a boom for the last month or so, haven't they?
Yeah, with everybody staying home, they are the go-to place to go to catch up on entertainment. So they gained nearly 16 million subscribers during this quarter, but they missed on earnings. They reported that they missed by 8 cents a share. Revenue was basically in line with expectations. They are trading down this morning a little over 1%. Yeah.
You and I were both confused as to how you can miss when you add that many subscribers.
Yeah, exactly. So I'm not sure what the deal was there, but and then let's look at airlines, right? We had Delta Airline report. They lost 51 cents a share. That was like $800 something million, I think, the first quarter. But that was better than expected. They expected to lose 70 cents a share. So revenue was below forecast. So they're obviously struggling significantly, though they like the stock price. I mean, they elevated the stock price because they actually kind of beat on earnings, up 3.5% this morning.
Cool. I know you're on a schedule, so we're going to cut it a little bit earlier than normal. One of the things you watch a lot is Chipotle, and I'm seeing green ink on their report this morning.
Well, Chipotle was kind of interesting. Even being closed down, they were able to beat by 18 cents a share. Revenue was basically in line, which is kind of unexpected for a restaurant, right? They saw an 80% jump in online orders. That's really kind of helped them through this hump here where they've had to close down the dining room. So good things really helping them out when it comes to their portfolio. They're up 6.5% this morning.
Wow. One of the guys that work here has a friend that works in the restaurant business, and he says that actually if you've got a model that works well for distribution, the lack of overhead for the number of employees doing a takeout business, actually you can run at a better margin. Evidently, Chipotle is one of those businesses.
I guess so. They've really considering it's a restaurant and what we've gone through, I think they had a great quarter.
Oh, yeah. Resetting the table for the morning, the Dow was off yesterday by 2.5%+, down 631 points. NASDAQ down by darn near 3.5%. And the Standard & Poor's was off by 86. I got no way to call it anyway but a poopy day. A little change on the Congress and kind of gave us a sense of optimism this morning, 45 minutes early. Where are we going?
Hey, it seems like anytime they're dumping money into the system, Dave, we get bumps in the market, and that's what we're seeing today. At least that's what I believe. The Dow's up 1.5%. The S&P 500 is up almost 1.6%. The NASDAQ's up 1.4%. So everything is definitely looking green, including the commodity side. We're seeing silver and gold jump significantly up today. Silver's up 1.5%. Gold's up almost 2% this morning. And we've got that black crude oil heading up almost 10% this morning to a whopping $12.71 a barrel.
Boy, is that impressive. Oh, Lord. Mixed markets in Asia. The close early this morning. Europe generally trading up. Phillip, I know somebody's going to need some advice as far as how to cope with this volatility. How do we make contact with you?
David, give us a call at 863-382-0037. Let us help coach you into and through retirement. That's the key. And then catch us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730. And you can stream it online at, I don't know your website, Dave. Sorry. I don't have it off the top of my head written down anywhere. But I know if you look at the Highlands Radio Group, you will find where to stream it.
It's newstalk730am.com. Phillip, thank you much. We'll catch you in the morning, all right?
All right, buddy. Thanks. You have a great one.
Thanks much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Remember that first paycheck?